Today, the eye-watering rate rise pain will continue. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, new analysis from Domain predicts the Reserve Bank will lift interest rates 0.25% to a 10-year high of 3.1% at its December the 6th meeting. The RBA has consistently hiked the OCR since May this year as it continues its mission of reining in inflation to within its 2 to 3% target. The official cash rate has increased from 0.1% to 2.85%. That's a total increase of 2.75% in just 7 months, with the consensus that mortgage holders can continue to see increases into 2023. Domain's latest analysis shows for a household with a $1 million mortgage, monthly repayments have already increased by more than $1,600 and could increase an additional $152 a month with the looming December decision. Domain Chief of Research and economist Dr. Nicola Powell said history and previous market trends could provide an insight into what mortgage holders could expect in 2023. Downturns have been the equivalent of just over 1/4 of the duration of the preceding upswing. So we know this downturn won't last forever, Powell said. With interest rates rising and property prices falling, it can understandably make homeowners feel uncertain about their property journey. But Domain's analysis of directly comparing the steepness and duration of an upswing and subsequent downturn since 1995 should provide some bigger picture perspective. Powell said the rapid increase in interest rates had triggered a wave of refinancing as Australians on fixed-rate home loans started to revisit their finances. This trend is expected to continue into 2023 as more Australians see their fixed rate expiring, she said. Customers are responding in a variety of different ways. Many are looking at refinancing to try and alleviate the pressure on the household budget. For buyers, we have seen a more cautious approach to their purchase and taking their time to see what happens with rates in the new year. So, what are the big four banks forecasting for the official cash rate? Well, ANZ is looking at a peak of 3.85% in mid-2023. CBA, a peak of 3.1% in late 2022. NAB, a peak of 3.6% in early 2023, and Westpac, a peak of 3.85% early in 2023. And in fact, the ASX 30 market view is for a peak of 3.6% in November 2023, before a small fall into 2024 by April down to 3.48%. Now, another 25 basis points would give a cumulative increase of 3% in the cash rate. And that would add an additional $76 per month to a $500,000 mortgage, which is actually in total an additional $893 per month since rates started to rise. For a $750,000 mortgage, it would mean an additional $114 per month if the rate moved again this time, but the additional amount would be $1,337 per month in total. For a $1 million mortgage, it means another $152 per month, giving a cumulative interest of $1,793 per month. And for a $2 million mortgage, well, that's an increase of an additional $303 per month if rates go up again. And that would give a cumulative increase of an additional $3,838 per month. Domain property editor Alice Saltz said, homeowners should be prepared for future interest rate rises. The message from the RBA is clear. Tighten the purse strings and hold on while we ride out the uncertainty in this price cycle, Stoltz said. Savvy buyers are now more mindful about what they can commit to in terms of a home loan, and they're also pricing in future rate hikes. Along with these basics, the next few months should be about flexibility. Stoltz said, now was the time to rethink property types or be more open to exploring neighbouring suburbs that might offer a buyer's desired home for less. Reflect on other household costs on your overall budget and make sure you're getting the best interest rate for your savings account, she said. Speak to brokers to understand what payments would be if you locked in a fixed rate now, rather than waiting for another few months when rates could be higher. Now, the point I'd make here is that there is clearly uncertainty ahead as to how high rates are going to run. In fact, I've just updated my scenarios. And again, on the best case scenario, if rates really don't go much higher and maybe ease back later, then price falls are relatively contained. But if rates go higher as expected, then unfortunately price falls will be more severe. Now we're going to discuss this in more detail tomorrow evening in our live stream at 8 p.m. Sydney time. You can join me then, and I'll go through the scenarios and also look at individual postcode examples. But I think the bottom line is that the future trajectory of interest rates is still relatively uncertain. And it's not just a domestic issue, it is also based on what the Federal Reserve may do in the US. And as I discussed recently, of course, the markets have been gyrating, on one hand hoping the Fed will not lift rates much more, but on the other, reacting when the Fed says we're going to have to lift rates more. And like lemmings, they go in one direction and then the other. So the bottom line is you need to actually get your finances in order, and you need to ensure that you've got some wriggle room, because rates will be higher and they will stay higher for longer. And unfortunately, there are going to be some people caught out simply because they've been overcommitted when, of course, they were banking on no rate rises until 2024, which, of course, was precisely what Phil Lowe said up till November last year. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.